This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashir. Thanks for joining us at XM.com. Bond yields surged on Tuesday as investors fretted about how far central banks will go to contain inflationary pressures that are rampaging around the world. U.S. Treasury yields edged lower for most of May as speculation that inflation in America is peaking led to some scaling back of Fed rate hike bets. But inflation expectations have started to head up again, and the 10-year Treasury yield has climbed back above 3% as investors grew doubtful about whether the Fed would pause its tightening cycle without a very substantial drop in inflation. U.S. CPI data due on Friday is expected to show only a moderation in May. Moreover, the U.S. Treasury Department has a busy week lined up of new bond issuance, so the prospect of a large supply of debt entering the bond market is exacerbating the sell-off that got underway at the end of May. The U.S. dollar was broadly firmer on Tuesday, and its index against a basket of currencies was on track for a third straight day of gains. The ECB is expected to pave the way for its first rate hike in more than a decade on Thursday, and the possibility of the ECB adopting a more hawkish line than expected is limiting the euro's losses today. The Australian dollar was the day's best performer, even though it paired earlier gains to stand flat versus the greenback in early European trading. The Aussie briefly shot up after the RBA hiked rates by a bigger than expected 50 basis points. The RBA's leap onto the rate hike boat, and the ECB expected to follow suit, have left the Bank of Japan as the lone dove in the world of central banks. Subsequently, the yen has slid sharply this month, and the dollar surged to just under 133 yen today. The pound steadied a bit as European trading got underway after dipping in overnight trading following Prime Minister Johnson's vote of confidence yesterday. Although Johnson won the vote, he's come out much weaker as 148 of his own MPs failed to back him. The big risk now for the pound is if Johnson tries to woo voters with pre-election giveaways that could end up worsening the inflation problem by stimulating demand. In equity markets, European indices opened in the red as U.S. stock futures turned negative after yesterday's modest gains on Wall Street. The S&P 500 closed up 0.3%, but the rebound, which looked quite promising a week ago, has sputtered. This was today's Daily Market Comment. Thanks for joining us at XM.com.